Alright, good afternoon everyone. Today is Wednesday, the 20th day of February 2013. Wow, where did February go? Only 8 days left. Alright, well that said, let's do the results. We ended plus 4 ticks on gold and plus 20 ticks on crude this morning in the live trading room. We took a Russell trade. We ended up getting a break even on that one. It took us 39 minutes to get to our 2-point profit target today. Okay. 39 minutes. Our first trade was a losing trade. I'll go over that in just a minute, but let's just jump in here on the crude oil. Now, I'm going to talk more about the beginning of crude than what happened right in here. All right, we had a great entry on crude right here. This was the start of the crude. Now, the way that we do our trading, you know, we're always trading with the trend, and our setups are always the same across all the markets. Our time frames are the same. The indicator set's the same. Everything is the same across all the time frames. Everything that we do, all the markets that we do, it's all the same time frame. Everything. All right. If you have not taken a trial with us and you want to take a trial with us, go to www.cfrn, like Nancy.net/apply. Sign up for the free trial. In the free trial, you get 5 days in our live trading room. And you get access to the charting platform and the indicator set. You'll be able to sit there and watch us put the trades on, explain the trades as they come together. Typically I'll tell you before the trade's going to happen or before the trade triggers what your entry point will be, where you're going to be looking to get long or short. I'll show you when I get long and when I get short. I'll let you know when all that happens. You can see in here this morning we had crude oil in the pre-market was moving up and moving up and moving up. It got up here, it sort of plateaued. Then it started to move down. I had drawn this trend line in here, and on the close down below that trend line right here, you could have taken a short trade. Okay, I missed that opportunity, and it moved down. It came back up, hit the BBC. I drew another trend line on there. How do you draw the trend lines, you might ask? Well, become a partner, get into the live trading room, and all that will become pretty obvious. Hopefully, over time. We have hundreds of videos in our members area for you to go and watch to see how we do this. Actually, if you just go and watch the recaps that we have on the website, I go over it in detail there quite a bit too. Right here we had the close down below that trend line right there is where I got short. What I was really looking for here, and everyone in the live trading room, because we were at an even number here, it was 97. We could have taken this close right here at 97.01, but I wanted to see one more close down. And then I said, if we break this level right here, this 96.98 level, if we drop through that, we should see, it should be explosive. We should see quick movement after that. And it was. It was very quick movement after that. I took 20 ticks profit on this trade. And obviously you can see it really tanked. There was between right here at our entry at 97 and down here at 95, that's $2,000 a contract. There was a lot of opportunity for you to make money in there. You can see I highlighted areas in here as it was happening, as it was coming around. I highlighted all these different areas where you could have placed trades. And there's a lot more in here. If you look for the divergences and you look for the areas where you could have drawn trend lines, there's a bunch of them in here. You look for the divergence, and right up above it on this move down, there's almost always going to be a spot where you could have drawn a trend line. So, the way to get in on these trend line trades like this is when you have divergence down here on the slingshot, like this right here, or this, or this, or this, or even this, or this. You draw a trend line up the bottoms, and you wait for a close down below the trend line. Pretty simple, pretty straightforward. When you have a strong trending market like this, that's how you do it. All right. Then something happened right here at 11 o'clock. It was like the crude inventories came out at 11 o'clock, because this is similar to what happens when the crude inventories come out. But as far as I know, they didn't come out today. And they're due to come out tomorrow. Tomorrow at 11 o'clock. But anyway, more opportunity in here, looking for the closes down below with the divergence. Okay, we lost divergence in here, so not looking for any trades in here. Got the divergence back, but we didn't have any trades in here. Lost the divergence again. And when the market starts jumping around a lot like this, you see how many bars there are from this minute to this minute. All these bars. All right. Then it started moving up. And there were trades here on the way up with the bullish divergence. Then it switched directions a little bit for a second in here. There was no trade on the short side. It went back on the long side. There were more opportunities in here on the long side. All right. This was the close of the morning session. There was one last opportunity right here at the close of the morning session, and then I stopped looking at it. But you can see there were a couple more opportunities in here on the long side. We're using the same indicators, the same trade setup, the same everything across all the markets. I've said that already. Here is how to do that trade that I showed earlier over here on the crude oil, like the one that I took on the crude, right in here. All right, the close down below the trend line, because it was blue in the cycle, we had the big bearish divergence. There was, let's see, hang on, here we go. Oop, not that one, wrong picture. Here we go. Right here, the close down below the trend line right there, just like this. All right, with bearish divergence. That's when you jump in the trade. Okay. As I've said many times, the potential in the trade is the space in between the green line and the cycle. All right. If you have a lot of space, you have a lot of potential. And in all these cases here, we had some pretty good potential in the trades. All right. That was crude oil. Now, crude just went nuts there at 11 o'clock. I don't know why, but I really stopped looking at it after a while. It became a distraction to me. You know, if it was the only market I was trading, there was a ton of opportunity there if it was the only market that I was trading. Okay, but it wasn't the only market I was trading. I was also trading this one over here, the Russell. Now on the Russell, we took a close down below the trend line, the same stuff, all right, the same thing that we look for on all the markets. It's the same thing. We tested the BBC. We had a down close off the BBC, but we had blue in the cycle, so we needed a close below the trend line. The close was right there. I was telling everyone when I got into this trade, I got in at 930.4. I was telling everyone when I get into the trade, it's going to get down here to 929. I said, look for it to get down there to 929. Once we had gotten down below the MA1 right here, I moved my stop down to break even, and it came back up, took me out at break even, and then it dropped. It actually dropped from all the way up here. I was in at 930.4, and it dropped all the way down to 924.4. So that is $600 a contract right there. That moved down. But anyway, that is that. That's what the Russell did this morning. It went zone to zone too. Within all that, it went zone to zone. The crude oil is starting to move again. For those of you guys who are partners, the crude oil is starting to move again. It's pulling back up. I'm about to test the BBC. Here's the trend line right there. Bearish divergence. Look for a test of the BBC with a down close or a down close below the trend line. This bar here, if it closes up, you're going to have blue on the cycle, so you're going to need a close below the trend line. There it is. You're going to need a close below the trend line. All right, for all the partners who are in here watching right now. Gold. Let's go to gold. Gold had a bunch of trades today. Some of them were great. Some of them were not so great. I started off with this losing trade right here. I got long right in here. You know, we had a bullish cross. Here, let me bring up that other picture. This one. Okay, step by step. Step one, we had a cross of the MA1 over the BBC. All right. We had the MA1 cross over the BBC right here. MA1 crossed over the BBC. Step two is it pulls away from the BBC. See the space in there. Step three is it pulls back down, tests the BBC, and then gives an up close in the direction of the cross. In this case right here, it didn't pull all the way back down. It had so much momentum, it didn't pull all the way back down to the BBC. It just closed up above. So I went long on the up close, and it eventually stopped me out. All right. That happens, unfortunately. Then it turned around and changed directions. I missed this one. I wish I would have gotten this one, but it turned around and changed directions. Step one is the cross down below. Step two is the space. Step three is the test with the close in the direction of the cross. It was a down cross, down close. Step four is the bearish divergence. That was a picture-perfect trade right there. I think I missed it because I was looking at something else or reading something else, but that was a perfect trade right there. I know some of our partners in the live trading room got that trade this morning. That one right there would have put you up on the day. I missed that one. I missed that one. I missed that one. I missed that one. I did get into this one. Now this is the one where I was also short in crude at the same time. So I was managing both trades at the same time. It was a pretty intense minute for me. but fortunately it was only a minute. Um, so right here, it was again just like that picture. All right, and this is actually a crude oil picture from a month ago, month and a half ago, but it's always the same. It doesn't change. You get your MA1 cross below the BBC. The BBC is the green line. Space in here, test to the BBC, which is the green line with a down close, right? Just like over here. And check for your divergence. You have divergence, right? Divergence was right there. So my entry was right there. All right. This was another one of those ones I said if we break down through this level, it should be explosive, and it was. There was another opportunity right in here, same type of thing, right in here again. If you miss the first one, just keep your eyes open. There'll be another one. I got that one. I missed that one and that one, and there was one up here that I missed too. Let's see. I drew that trend line, but we had blue on the cycle, so we needed a down close right in there, or right down here, for a possible move down. I don't know if that one actually stopped out. Seth, I think you can probably remind me. And that was it. It's the same thing over and over and over and over and over again. I took a trade over here. I ended up taking break even on this one toward the end of the morning session. And that one ran up another 20 ticks. The same thing over and over and over again. You see, here's another one. This is just like the other one, way back here. Isn't it? Look at this. If I could highlight an area like this and copy it. All I did here, I wish I could, but all I did right here was just copy this little section. This, my square. If I paste, it's just going to paste my square. So I'm not really illustrating anything, but that I know how to cut and paste. But the same exact thing over and over and over again, right here. All right, the same thing. In this case, the cycle was blue when you got your down close, so you need to close down below the trend line. That's all. Simple as that. There's your trend line. There's your down close. There's your move down. All right. Same thing's happening right here. Right. Okay. And that's all you have to do, guys. That's all there is to it. You learn that stuff, you can do what you need to do. Let's see. On the NQ, I didn't take any trades on the NQ this morning. I don't even have an NQ DOM up, but I did point out some trades. Let's see. This thing started over here. Let's see. Right in here. All right, we had the same stuff. It went to pull back. We had a bearish cross, space, pull back, bearish divergence. It didn't hit the BBC, so you need to close below the trend line. Right in there, it moved down. Over here, it tested the BBC. We had blue on the cycle, so the up close was good, and it moved up. Over here, we had a test of the BBC right here with a down close with red on the cycle for the move down. Okay, the same thing over and 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 over again. Why is the divergence required for the setup? The divergence is what tells you get so much information from the slingshot. This whole thing without the slingshot would be, it's a crapshoot. Because you don't know when you get into a trade. Without the slingshot, you don't have any idea how much potential there is in the trade. You don't have any idea if a trade's likely to stop right where it is and change directions. You don't know any of that stuff. With the slingshot, like right here, when the green line hit the cycle right there, you had a pretty good idea that it was going to start pulling back from right there. All right? You had a pretty good idea. When you entered this trade right in here, this is the trend line, this is the down close. So you're looking at this right here for your entry. When you entered this trade right here, you had a pretty good idea of what to expect in the trade because you knew the green line was going to work its way down into the cycle. You expected the green line was going to work its way down into the cycle. All right? That's why you need the divergence. If you don't have the divergence, then you just don't know. Okay? That's a good question, though. What are my favorite markets to trade? I'll trade anything that's moving. I trade anything that's giving me the setups. It just happens that crude oil and gold are the ones that give the most setups. But I trade anything. Patrick, sometimes I am a little a little too early, but I have rules that I follow, so it's always the same. Okay, I did, Gary, and I still owe you a call. I know I still owe you a call, Gary, but yeah, I did. And let's see. All right, that was the NQ. On the ES, there was a trade opportunity in here. The same thing, guys. We waited for it to get down below the weekly trading zone, because it was sideways in here. Once it finally did, there was a shorting opportunity right here. You can draw a trend line up the bottoms, came up, tested the BBC, had bearish divergence with blue on the cycle, so you needed a down close below the trend line. So the entry was right in there at 1526.25. And look, it dropped all the way down there to 1519.75 for 6.5 points. We looked at other things over here briefly. We looked at natural gas, the yen briefly, but there wasn't really anything happening over there that we could do anything with at the time. We kind of watched it, but nothing really happened. On the euro, there was some movement on the euro. There was one opportunity in here that Frank pointed out. It tested the BBC and gave a down close. We had red on the cycle and a little bit of divergence. You could have shorted right in here at 33.81. That dropped all the way down to 33.71 for 10 ticks. 10 ticks on the euros, like 10 ticks on the ES for 2.5 points. There was another one right over here at 33.64. All right here, you see how we have the bearish divergence. It closed below that trend line. From 33.64, it tanked all the way down to 33.40. That's 24 ticks. That's the equivalent of 6 points on the ES. All right, there's another one right in here for a couple of points worth, and that's it. So the euro worked out okay. The trend line is required. Hang on, let me bring up that picture. Okay, Ken. The trend line is required on two occasions. One is when the cycle is not the right color, and two is when it doesn't hit the BBC. Okay, so one right here, it didn't pull all the way back to the BBC. There was so much momentum in the market that it didn't pull all the way back to the BBC. Two was over here. The cycle was the wrong color. The cycle happened to be the wrong color over here as well, so it can be both at the same time. But right here, it did hit the BBC, but the cycle was the wrong color, so you needed to wait for the close above the trend line. Okay? Uh-oh. Login failed. User is connected from another location. That's not good. Somehow, I just connected from another location. I need to figure out what the heck just happened there. All right. If you have an 8-tick range chart, does it give you wider slingshot divergence so there will be more reaction time to enter the trade? If you have a wider slingshot, you need to use more risk. All right, more risk and more profit potential. So yeah, there'll be more reaction time to enter the trade. That's true. But I mean, let's just look at one. Let's look at gold with an 8-tick range. All right. Uh-oh. You know what? I just disconnected somehow. I can't switch over to it. Somehow somebody just connected me on another computer. Let me just disconnect them. However that happened.
Do you have the platform on your tablet?
I do not.
Oh, okay.
I don't know what just happened there, though. How I possibly could have been connected on another computer, but I just reconnected here, and let me just make sure that nobody placed any trades. I don't know. I have...
Because you can be on your tablet and your desktop at the same time.
Now, you know what I'm wondering? Because I've been doing some work, I have it on other computers, but they would have to type in the password unless it had auto reconnect on. Let me just check and make sure no trades have been placed there in that few minutes. Okay, it's all good. All right. So I was going to show you on an 8-tick range. No, that was I wish it were that simple, but here we go. Because I was doing that work, I have things up in other locations, and if somebody just opened up one of the laptops that I was doing work on, it might have done an auto connect or something like that. All right, so here we have an 8-tick range chart. Okay. Here we have an 8-tick range chart, and you would look for the same exact things on an 8-tick range chart. You would just look for you look for your divergences. You draw your trend lines. You do the same stuff over and over and over again. Okay. Like right in here, you see how on the 4-tick range it was right there. On an 8-tick range, you would shift it back a bit here. And though the entry on the 4-tick range would have been right here, on the 8-tick range it would have been up here. Your risk would have to be 16 ticks. On the 4-tick range, I use 8 ticks risk on everything because it's twice the bar size. All right. On the 8-tick range, you would have to use 16 ticks risk, but then you would look for probably 16, 20 ticks target on every one too. All right. So your entry would have been on the up close right here on this one. Over here, you tested the BBC. Give it down close. Let's see. If you draw the trend lines in there, the up close was right there with the red cycle. So you would have gotten long right in there. And that went from 82.6 all the way up to 85. That's what, $240 a contract? And you would have been risking 160 to make that 240. Over here, well, that wouldn't have worked out right. It wouldn't have had any trade right in there. But anyway. Is it possible to risk 4 ticks only and still be net positive gain on an 8-tick range? I don't know. On a 4-tick range, I don't do it. Okay, there's a bunch of questions. Let me just go back and answer one of them. How many trades did I take today? How many wins? How many losses? I had 1 losing trade. I think I had 2 break-even trades and 2 winning trades, I think. No, I had 1 break-even trade. I had 1 losing trade, 1 break-even trade, and 2 winning trades. That's how it went. I think I had 4 trades on the day. Is it possible to risk 4 ticks only and still be net positive gain? I'm sure it's possible. We do have some guys that are actually working on that sort of a solution. The theory is that once you're in a 4-tick range, when it hits the BBC, it's either going to be right or wrong. And if it's right, usually 4 ticks is enough to keep you in the trade. Okay, if it's wrong, then you only lose 4 ticks. Let's see, you're curious about the 4-tick range bars. You use Ninja, and they're not the same as a 4-tick range. Is there some other type of range bar? This is a normal range bar. I don't know what Ninja has. Our stuff isn't available on Ninja. Every bar is 4 ticks in height. Okay, every single bar is 4 ticks in height. Every bar has a range of 4 ticks. Every single market that you saw me trade today had 4-tick range bars. Every bar was 4 ticks in height. If you keep things uniform like that all the way across the markets, then you don't have to do any additional processing yourself mentally when you're putting a trade on. You just have to know where the setups are, and the risk is always the same. For me, the risk is always the same. Okay. And let's see, there was another one. That was that. So to recap, I did that. All right. That's it. I think I covered all the questions. If anybody has any more questions, feel free to email us at support@cfrn.net. That's support@cfrn.net. Thomas, I trail my stop manually. Okay. Is it possible to have an auto trend line drawn? It is possible. It won't be accurate, but it is possible. I actually created something to draw auto trend lines. I don't know if I have it on this computer, but let me see. It would be in here somewhere. I did draw something in here. I did create something to draw those, but I don't think I did it on this computer. No, I mustn't have done it on this computer. How soon do I get to break even? I put my stop at break even when price gets on the other side of the MA1, because typically when price gets on the other side of the MA1 like it did right here, it's going to stay there until it changes directions. All right. So like right over here, I put my stop at break even, and I didn't take this trade, but I would have put my stop at break even when price got on the other side of the MA1. Okay. It was CFTL. It was in there, Cliff. Oh, it was. You're brilliant. You're brilliant. Let's see what this bad boy looks like. I haven't finished working on it. There it is. See? I haven't finished working on it. It's another one of those works that we have in progress right here. But I am going to remove that. Okay. Let's see. Yes, and more can, I think. All right. All right, guys. I am going to wrap up the recording part of this right here. Okay? And I'll still answer all your questions, but I'm just going to wrap up the recording here. All right. Again, if you haven't taken the free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. We have a thing we're doing right now for all the active partners, because our next workshop is our 100th weekly workshop. We're not going to have a workshop tomorrow night. We're going to do it next Thursday night on the 28th, the last day of the month. It's our 100th weekly workshop, and we're going to give away an Emini iPad to one of the active partners. That means if you're out there and you're sitting on the fence, you need to become an active partner. If you are if you are an inactive partner and you want to get in on the drawing for the mini iPad, there it is. You see that? You need to become an active partner to get into that drawing. Okay. If you're about to expire, you should have gotten something in your email today. If your partnership is about to expire, not your partnership, but your active status is about to expire, you should have gotten something in your email. So, take care of that business. All right. That said, I'm going to stop the recording right here.